Good morning, everybody. Good morning, good morning. Or good afternoon, depending on where you're from. So the hours have gone, hours have changed slightly. So I'm assuming the US hours have come forward. And for us in the UK, for me, it's 1 p.m., which would normally be 2 p.m. for me. So I put a post in the room this morning just to let you guys know. The 2nd of November, it will go back to normal. So really only relevant for, I guess, is it Europe? So if you are in the UK, I know there's a couple of you. It'll be back to normal. Hopefully not hopefully, it will be on next, pretty much the end of this week, Sunday. So yeah, next week it'll be back to normal. 2 o'clock for me. I'll get to the PC. But at the moment this week it'll be 1 o'clock. So just bear with me if I am delayed for whatever reason this week. It'll just be a case of schedule has gone forward slightly. But other than that, it should be fine. I haven't really done any work this morning on the chart, so we'll kind of just do it together. I did do a lot of work over the weekend with the new course. Just a lot of work. So I'm a little bit drained, but I have had a nice break this morning. But yesterday I was just like tunnel vision, and I pretty much did not really do anything other than spend time on the PC, which was quite draining. So zooming out just on the daily point of view, I am just going to show you where we came down to, which was this. There was a 50 to 50 in this extension here. That is when we came down to on Friday a couple of weeks ago for the shenanigans or tomfoolery that we had a couple of weeks ago. That target is above us at 955s, and we are pretty much 110 points away from that. So that is going to be an important extension that I pay attention to, just in terms of a potential magnet for price to gravitate towards. Obviously, those traders that positioned themselves down at the halfway back and down inside all of these halfway backs here, those being Thursday and Friday the 17th of October, those have gone to targets, and you can see we are at that 62. So put a long story short, you can also see again the monthly ATR high is above us at 884s. Again, that is 25 884s is the monthly ATR. We have traded 98% of that range. The average range for the month is 1725, and we've traded 1694. So going to have low expectations going into, just, I guess, we have earnings this week, so I'm expecting us to have some volatility. But at the same time, I'm never ever going to push when we are at monthly highs. And I can show you, this was a video I did yesterday in the new course, but whenever we trade these monthly highs, such as back in September, we traded the monthly high pretty much to that area, and we came all the way down 500-600 points, right? I can show several of these examples again the following month. In May, we traded the monthly ATR, and we went nowhere for the rest of the month, right? 300 points above. But we came down 800 points before trading that back up, right? I can show several of these examples. I'm not going to bore you with them. I just want you to pay attention to where we are. Again, monthly ATR here, we get above slightly and then come all the way back in. Monthly ATR, go nowhere, slightly above, come right back into range. So point being is we are pretty much at 98% of the monthly range and close to 100%. So just keep that in mind. I'm not going to be, if I'm in a long, I'm not really going to be marrying a position expecting hundreds of points unless we get a decent pullback. So just so you're aware, that I wanted to preface that just going into this week. Obviously, with earnings, anything could happen, and obviously we can expand those ranges. That is probable, but at the same time, I'm not going to be taking intraday trades based on just because I think earnings might go higher. That's going to be irrelevant for me trading intraday. So going into the smaller time frames, we'll just zoom out into what we had last week. And if you look on the RTH chart, this is an extension that is valid. And you can see it's had multiple touch points. And if we go to the ETH, you'll see that is drawing from that 50. And you can see we traded the halfway back pretty much multiple times on Thursday, even on Wednesday, and I think this same draw here traded on Tuesday. So all week we traded that halfway back, not last week, but the week before. That went to its negative 23, and then we went into a same anchor new high. The same anchor new high bid the 38, which was also last Wednesday's last Wednesday's low, ETH and RTH low. That has gapped up and completed that extension this morning on the overnight session. So what I would be looking for, since we have gone to and through that target, I would be looking at, again, this is an aggressive, but this is all I would be looking at in terms of pullbacks. And that pullback, as I spoke about yesterday in the course, for anyone who does purchase the new course, you'll hear me speak about those breaks and retests of those trend lines. This is an ETH trend line, and this is also the previous day high from Friday. And it is also the previous, what would be the previous week high as well, because Friday was the high. So we have lots of confluences if we do come down into that extension, which would be either the 38 or the 50. We could bid both, but essentially it's going to be a gap fill and a gap fill reversal potentially, right? So this is what I would look for, some consolidation around here, and potentially we come back up into that monthly ATR. But again, the range is really, really tight here. So I would much prefer this to fail and actually come lower and actually get maybe what would be a same anchor new high from this extension down here, which is from last Friday and last Thursday. Last Thursday went full negative 100. There is also, since this was very aggressive, two times ATR, 3.3 times ATR, I would also be drawing this as a high to high as well. So I don't really mind where we come down to, but point being is you need some sort of retracement back down into hopefully Friday's high and or 25,500s, which at the moment is inside our ETH range. We've got 400 points to the downside. That is expected and would be completely normal for today's session. If we get down there, I would be wanting to see if we hold this 50 and or the 38. And if we start true trending at that point in time, I would look for some potential longs. But I certainly will not be buying any longs here, even if we continue up. I really just don't care for it. This is why we have a long-term portfolio. We don't need to bid aggressive extensions when we're in these areas, because we can just let the long-term portfolio do its thing and only participate on day trades that make sense from a risk to reward point of view. So hopefully that's been useful this morning. I'm only really going to be participating if we get some pullbacks in here. I think if you continue to gun higher, brilliant for the long term, but it's not something I would necessarily be going for. Maybe you get a overnight low hold, and maybe that becomes your support from the overnight session. We've already had that low or that high turn into support here from the 6 p.m. open. So maybe that is the support that sends us higher. But again, with us being so close to those monthly ranges, I don't really care that much for it. I would rather just wait for those pullbacks and trade them when we get them. So if it's a slow week, it's a slow week. Maybe the moves happen overnight with the earnings. And if that's the case, then again, I will just be happy that I've got a long term. And when we go into November, I will continue to push it when we have that new monthly range continuity, which at the moment it's shown around 1,700 points, right? And the dailies are around 400. So again, it's still more advantageous to be a day trader at the moment in terms of those daily ranges. So that's all I had this morning. If there's any questions from Friday or Thursday, please let me know and I will answer the questions in the trading room on Whoop. Anyone on YouTube watching this, if you aren't a member, the links will be in the description below, and I will see you over